Hello friends, today we are going to analyze SPY chart on a 5-minute time frame. This is for 13th August and that is 13th August 2025. So first what we see every time is the direction in which we want to trade. So for this we will consider 200 day simple moving average and 20 period simple moving average. As you can see, this blue color line is a 20 period simple moving average on a 5-minute chart, and there is a 200-day moving average below. This is not visible on this screenshot, but it is down there. So since the market has opened above both the moving averages, we are bullish on the market. So as long as the market stays above both the moving averages, we are trying to buy the market. Now previous close, if you see on the 12th close is here. This is open, previous close, and our open is here. So for analysis purpose we have to connect these two levels and assume there's a big candle, and based on this bullish candle, big bullish candle, we are also bullish in we have a bullish view. However, because it is such a wide gap up, we have to be very careful while taking the trade, and but as per strategy we can take a trade if it is showing the bullish sign. Now you see the first candle, it is a strong bullish candle, and we enter at the close of the first candle. Since there is a huge gap up and the market has gone up for a continuously 25 minutes, that is 5 candles into 5 minutes is equal to 25. So continuously market has gone up. We will, at the first sign of reversal, we will try to exit the market. So on this red candle we will try to exit. So at the close of this candle we are exiting, and our stop loss was definitely below the first candle. With this, if we measure our with risk reward tool, we hardly got around 0.45 risk to reward ratio. See, this was such a low momentum after the market open was expected because there was a huge gap up. Okay, so because of huge gap up, the market would have done its movement already. It has done whatever movement it wanted to move on the upside, it has already done. That's why after market open it cannot go too far, and we were able to get only 0.45 RR on this trade. Now after the close of the first position, market has been continuously on the downtrend. There are strategies to enter on short side on here, but we will stick to our strategy of taking only trades above 20 and 200 moving average for the buy side positions. Now market after first trade, it has entered the no trade zone, and we will be avoiding any positions until market comes out of the no trade zone. So if you see this green candle, it closes above the 20-day moving average, and it is already above 200-day moving average on the bottom side. So we can take a position, buy trade on this candle, close of the green candle. But unfortunately the market makes a U-turn, takes a U-turn and closes below the moving average and breaks the low of our entry candle, which is a trigger candle. So we hit a stop loss here, and we lost 1 hour, 1 risk unit. So second trade is in a loss, first trade was in small profit. Let us analyze the third position. Again the market is continuously in the no trade zone, and only on this candle, if you see this candle, we try to come out of the no trade zone. We buy at the end of this 5-minute candle and we again hit our stop loss. So again we lost around 1 risk unit, and the third trade is also loss. Second is also loss. So net we were negative on our risk reward ratio till such point. However, market again, we tried to come out of the trade zone, no trade zone, and we got a bullish close above 20-day moving average. But for our good luck, we were able to get an entry here. Our stop loss was just below this small green candle, and we were able to ride the position till say this candle. Now let us analyze why we closed at this candle. Now if you see, our stop loss for this trade has never been touched, and the most concerning candle out of this first red candle, we did not exit because this was a strong green candle, was a strong bullish candle, and this red candle was only half of the movement what the green candle gave. We held the position, and on this red candle, this was a strong bearish candle. This actually we can exit on this position, but if you see, when we were closing this candle close, there was a huge wick on the bottom side. This gave us some confidence, okay, that market is still bullish. So what we can do, once this close of this candle, we can move our cost stop loss, we can bring it up and we can keep it at this level. Had we moved our stop loss before this candle was coming down, we would have got exited here. So if we held on to this position and say on this candle, hold on, I'll move this. Okay. So if we don't close in this position, then we don't have a strong bearish candle until here. See, because the market is almost nearing the end of the day, okay, we don't expect a strong movement at the end of the day. So as soon as you got a, see, even if you close here, the reward is very small and we don't exit, we'll try to hold the position if we have not already closed. But if we hold the position for this candle, these 2-3 candles, we can exit somewhere here. After that, we don't expect a market to spike and all. So this we will not enter. We will not like to take new position at the end of the day, but whatever position is there we can exit. Since from this point to this point we had a good momentum, we almost made 3 hours, and we can exit somewhere here. See, this actual exit will depend on your personality. Like if you are very aggressive, you can keep holding and you can enjoy the movement till end of the day. If you are very conservative, you can exit on the first green candle or even this candle, which in case you will be at cost to cost. Okay, so it's all depends on the psychology, how far you can hold the position. One more option for the traders, we can do two things. One is either exit fully on this candle, or exit 50% of your position on this candle and ride 50% till the end of the day. Third option is hold the position 100% of your position size till the end of the day. So it all depends on what kind of risk averse trader you are. So I have assumed that we exited on somewhere here, and the risk reward ratio is 3.39. So basically we were able to somehow get into profitable territory on this day because of this trade. So we have updated this in the website. Let's see, I'll show you on the website where it is updated, so you can keep, if you want to keep a track of the positions, you can match your trades with this strategy shown on the website. Okay, so this is our website, means to money. Hold on, yeah, this is our website, means to money. If you go to this first page, basically it shows our entire strategy, how to enter the position, how to exit the position, and simple rules for this simple moving average strategy. And then second page shows the track record. Second page shows the track record. If you see this, we are analyzing on 13th trades on 13th August. If you see this 18th row number 18 is our 13th August. We have made 0.45 risk reward on first trade, then 2 trades loss in a row, and the third trade was 3.37, and the total of all the 4 trades comes to 1.82 risk reward, which has been updated here. So that's all for this 13th August trades. Thanks a lot for watching the video, and if you like my work, you can subscribe to my social media. You can see all the links are mentioned in the first sheet. If you go down, this is a link for all my social media presence. If you like my work, please subscribe to YouTube, Facebook, Instagram, LinkedIn, and Twitter or X. Thanks a lot, friends, and happy trading. Best of luck.